BizBeat, the insight you need. Is the Japanese yen losing its luster as a global currency? Yes, it would appear so, considering that the safe haven asset has fallen to a two-decade low against the greenback. And with the Bank of Japan decided to stick to its loose monetary policy, the yen's language continued as it slipped to 130 against the US currency during afternoon trade on Thursday. So what exactly is ailing the Japanese currency? The widening gap between the dovish Central Bank of Japan and hawks in the United States has weighed heavily on the exchange rate of the currency. In addition, with import costs rising steadily due to the Russia-Ukraine conflict, the yen has been losing ground steadily against the US dollar. There was an old adage in the Japanese currency markets that the faltering yen was beneficial to the economy as it would help exporters. The rapid slide of the yen has, however, raised slowdown concerns and a specter of spiraling import costs lurking in the shadows. Addressing the Diet on April 18th, Japanese Finance Minister Shunichi Suzuki said, amid the ongoing economic upheaval in which surging crude oil and other commodity prices are placing a burden on companies and households, a falling yen is not necessarily good news. Instead, it is rather a bad, weak yen, he said. And that is where the unbothering stance of the BOJ on monetary policy comes to play. At its Thursday meeting, BOJ officials reiterated their commitment to a 10-year yield target and a loose monetary policy. Officials also said they would conduct an unlimited fixed-rate operation to buy 10-year Japanese government bonds at 0.25% every day. The BOJ's hands seem to be obviously tied when it comes to the monetary policy, considering that the Japanese government decided on Tuesday to allocate 6.2 trillion yen to halt the runaway surge in commodity prices. Analysts point out that if fiscal consolidations become even more difficult, the BOJ may well find that it has absolutely no further room to tighten monetary policy. To make matters worse, the yen has a vital role to play in international financial markets. After all, it is the third most traded foreign currency in the world. Its rapid depreciation would not only impact Japan, but also global markets. A recent article in the Wall Street Journal points out that the Japanese yen has fallen to a two-decade low against the US dollar, and that puts the risk of bad news spiraling far beyond Tokyo. Analysts say the Japanese yen may continue to see weakness against the US dollar if the policies of the Bank of Japan and the US Federal Reserve continue to move in divergent directions. Last Friday, US Treasury Secretary Janet Yellen and her Japanese counterpart, Shunichi Suzuki, affirmed the importance of stable foreign exchange rates amid the yen's recent rapid decline against the US dollar. However, what the currency markets need is more decisive action than empty rhetoric. In 1998, US authorities joined Japan in its efforts to arrest the yen's depreciation through a yen-buying, dollar-selling market intervention. But experts are skeptical whether the United States will support any move to weaken the dollar at present, especially as the country is grappling with soaring inflation.